Hello everyone, my name's Dean. Let's talk crypto. This is where you subscribe for daily Bitcoin updates and technical analysis. We track the price of Bitcoin as a proxy for the cryptocurrency markets at large. Today is September 19th, 2022, and here we are still in this silly, stupid, annoying, tedious range in the DXY. Why are we looking at the DXY? Because we're following the money, alright? That's the title of today's stream. Hope you're doing well. Hope you're having a great Monday. Let's get into the analysis. Alright, so on the hourly stream, you can see this channel that we've been in since we put in this B wave. Alright, and this is the B wave I'm referring to here. This through wave move up, ending in this ending diagonal, right? Quintessential, wave finisher right here. And then we basically have been consolidating in this channel, this teal channel, for all of 5 days, almost 6 days now, okay? And, it's annoying, it's tedious, it's it's not fun, right? Because we want the big move in crypto and stocks. We want to get positive price action. However, another way to look at this is a great opportunity, okay? And this is what I've done, all right? Personally, and this is not financial advice, but personally, I've been accumulating even more in this region, okay? This is just a great opportunity because we know what happens when this ultimately breaks down. That is the bull run. Like, that is like explosive price action. That, yeah, you can start investing there, but you always want to wait for a pullback and buy red candles, yeah? You can buy green candles. Sure, you can do whatever you want, but especially if you're buying on leverage, if you're buying spot, whatever, but if you're buying on leverage, it's better to buy red candles to kind of buy support, yeah? So this is an opportunity, and so I've used this channel, especially when this channel gets to the top here, right, to buy more crypto, all right? And why do I wait until this channel is at the top? Obviously because there is an almost perfect inverse correlation between the DXY, the US dollar index, and cryptocurrencies, as well as traditional stocks, right? Equities, risk on assets. Like, you can look at this. I've talked about this quite a bit on this channel, but you can see with every move up, we get a move down in crypto. With every move down, we get a move up in crypto. Here's coming another move up, but I don't know that this is necessarily going to take us back to the top of the channel. I'm not exactly sure what's going on. So what we're going to do right now is we're going to zoom in to the hourly or even the 15-minute chart, and we're going to try and read the price action in this teal channel. Guys, if you're getting value, please like, share, and subscribe. Let me check to see if anybody's checked in. Guys, also, please like the stream. Tell me where you're listening or watching from. Always appreciate it. Shout yourselves out. Don't be shy. Okay. So what the hell is going on in this channel here? Let's try and figure this out. Alright. Hourly time frame it is. Zoom in. Okay. So the first thing is quite simple. It's a three-wave move. That's an initial break of structure, all right? That's obvious, okay? It's always the first move. Now, the second move's also quite obvious, but it's a little more tricky because you got to figure out where the second move starts. If the first move's A, then the second move's B. It's always a counter, okay? A is going down, B's countering in three waves up. So 1, 2, 3 as I count it, okay? So that's my big B going up, okay? Now, I've got another move down in three waves, okay? You see that? 1, 2, 3. That, I would say, is my small a, okay? And I actually thought, right, on, what day was that? Friday, yeah, that this was small a and this was small b, but lo and behold, that is small a clearly. Now it's more clear now that more candles have printed, and this is the trick with these reversal patterns. You know, you got to kind of let them play out, but yeah, you try to read them as they form. There's no harm in that. You know, there's no harm in trying. It doesn't mean you're going to be perfect. So now this, if that was small a, now we should get a counter wave in 3 to that. Okay, so that would be going up. Okay, so it's just down, up, right? So B wave, small b, would be going up in 3 waves. I think that's this. Okay, and now if that's the case, then we should be putting in an impulse right here. Okay, that should be it. After a small pivot, which was this. Okay, so that's how I'm reading it, right? So I'm reading this as a small pivot. I'm reading this as the start of the impulse, okay? Perhaps. So let's zoom in there, right? I know I've previously said that this was the start of the impulse, but I misread it. And these corrective consolidation reversal patterns, these AB bases, they are challenging to read. They are indeed challenging to read. So it's not always got to be perfect, but the perfect is the enemy of the good sometimes. Just because you can't get it perfect doesn't mean you can't try, yeah? And develop strategies around that effort. So again, this is a small pivot, right? So this is sort of an A wave, 1, 2, 3. This is a B wave. This should take you into the impulse. Okay, if that's the case, then this should be a 5 wave move right here. And this should be a 3 wave move. Coming up to the 0,618 of this 5 wave move. Yeah, something like that. Okay, so I do expect, now let's turn the momentum indicator on. Yeah, I expect this move to go up a little bit more around 109.9, okay? Right before the 0,618, which is at 109.95, okay? So I do expect that for those reasons. Okay, that's my read, that's my count. Is it correct? I don't know. But that's my best count, all right? So let's just put it in there officially. Something like this. If my counts were always perfect, I would be a Brazilianaire, all right? And I would lose 0 trades. But, you know, I don't have a Brazilian dollars, and I lose trades from time to time, which is okay. That's the cost of doing business, right? Most of my trades are well and, you know, still going, but some trades do get stopped out from time to time, even, you know, long-term trades on low leverage. All right. So yeah, something like this. That being said, in context of the larger channel, we're really close. Do you see? If that is what I think it is, we're really close. If this is what I think it is, we come up here, maybe we reject right at the halfway point of this channel for wave 2, and then we come down for wave 3, come up to wave 4 to retest the bottom of this channel, right? Any major break was always followed by a retest, okay? And so I'm buying when we come up here. I'm buying when we come back here. I'm just buying, right? Anywhere in this channel, accumulating crypto anywhere in this channel is accumulating the bottom of the market, okay? It's accumulating the bottom of the market, and that's following the money. Following the money is understanding that the DXY, the US dollar index, is inversely correlated with equities, with crypto. And so when the dollar is high, which it is now, it's at a 20-year high. You're literally buying the equivalent of a 20-year low. Do you understand how that works? You're buying the equivalent of the 20-year low in crypto, stocks, and equities. Okay. not financial advice. And that doesn't necessarily mean that the SPX that we're going to look at in just a second isn't in correction, right? Even though it might be targeting 5,500, it's still in correction, right? It's not in perfect impulse, or it's not at the end of a bear market. It's in the middle of it. So, yeah, that's why I'm buying, and I've been buying like a madman, just accumulating, just accumulate intelligently, strategically. Try to not get shaken out. That's the operative term, that's the operative sort of strategy. And you're literally, this dotted line that you see here is something like a 13-14 year resistance. I'm just going to show you really quickly. So yeah, some people think, oh, the DXY is going up and up and higher, but like look at where it's at. Like look actually where it's at. Not even considering the momentum indicator that you see there, that's completely topped out. But look at this dotted line that I drew right here. It dates all the way back to 2008, right? So that's a 14-year resistance that you're basically butting your head up against, and you're about to come back down from. Okay, if the DXY were to break this level, I mean, you're just, all bets are, crypto and equities and stocks are going to zero. Quite literally. There's not, you're breaking a 20-year resistance without even retracing, you know what I mean? It doesn't make sense technically either, right? Given our counts, right? So that's basically me following the money. That's the DXY. That is why I am buying like a madman. And this is what I'm basing my principal analysis on right now. It's not reading Bitcoin or any other asset. Obviously, I'm looking at those as well, but I'm looking more closely at this consolidation in the DXY and this distribution, this potential distribution pattern that's happening. Okay, let's just check really quickly. Okay, nothing. Okay. Coming down to the SPX. So, if the DXY has topped, which it has for quite some time, then the SPX should be bottomed. Okay, bottoming or bottomed. Should have bottomed, and we do see that. I know people like to really focus on these moves here, but essentially you're just ranging, okay? Like, you go up, you hit some resistance, you come down, this is AB basing, this is ranging, you're at the bottom of a range, this is where you buy. You go up, maybe you do it again, but maybe you break up and out, okay? So that's what I'm seeing for the SPX. You're literally at a bottom. Your risk is minimized buying in this region, not financial advice, okay? That's a quick look at the SPX, okay? Now, a quick look at crypto. Okay, we're in the 1800s, 18,000s rather. But. So price structure over price. We want to look at price structure, okay? This is very important. Obviously, price is important as well, but price structure. We've maintained price structure. I know it looks grim, and those aren't the numbers we want to see. But at the end of the day, nothing's changed for our basic analysis, our basic understanding as to where we're at in the market. Okay, and here's why. Sorry, let me draw this channel really quickly so I can demonstrate what I'm looking to demonstrate. All right, so you essentially, since June, have done this. You've gone up, right? So this is my count actually. Whoops. This is my A wave. This is B wave. This is my A, my big A, and it's composed of 3 waves, right? Because you can break these down as well. But all in all, 1, 2, 3 is my big A. Okay, and this 3 waves down, 3 waves up, and then 5 waves down is my big B. That's my first degree of AB basing. Okay, and this right here is my second degree of AB basing. My 3 waves up, 3 waves down. Here, what you did, you didn't do anything. You literally came up all the way you came up to come all the way back down. Okay, and by the way, this is the second degree of AB basing right here. Okay, 2 degrees of AB basing necessary for major reversals. This is what I see over this consolidation reversal period of 94 days. Okay, so this, people who are like, oh, you see, it's so bearish, it's like, this was bearish. That is an advance. These are consolidation moves, up and down. I mean, they're annoying because you can get shaken out of your positions. But at the end of the day, remember, if you're buying, you always want to buy support. If you're buying and you have channel price action, you want to buy the bottom of a channel. Okay? You don't want to buy the top, nor do you want to buy the middle. You don't want to be inactive in the middle, and you want to buy at the bottom, and you want to sell the tops, or you wait until the top is breached, retested, and then you buy the retest. Okay? That's just trading 101. Channel trading 101 rather. So we're at the bottom of a channel. It's likely, given our larger analysis, given what the DXY is doing, that the next move is up, not only to the top of the channel, but up and out of the channel. We could have been accused of thinking that was happening here as well, because there's other ways that you could have counted all of this price action as 2 AB bases, and that's okay. You don't have to be perfect. Your counts aren't always going to be perfect. You just try. But it's clear now that this is another sort of corrective move up and a counter-corrective move down. It's nothing else other than that. You didn't do anything. You went up 100%, you went down 100%. You pretty much retraced 100% of your up move. Now, it's very likely, given the larger analysis where you're at for these past 100 days in this channel, that you're not only going to hit, people who say 20K, I mean, that doesn't make any sense. If you go to 20K, 20K is a random part. Like, 20K sounds good because it's a psychological resistance, but actually, and this is, again, channel trading 101, the most important support and resistance in any channel is the middle of a channel, the top, and the bottom. The bottom support, the middle is resistance if you're below it. It's support if you're above it. The top is resistance if you're below it, of course. And support if you're above it. Okay? So, if anything, if you're small time frame trader, you want to look at 22K. Because 22K, let's say more specifically 21.6, 21.7 represents the middle of this channel, which should represent some kind of resistance. I don't know if it's going to be, significant resistance. Because if we go impulsive, then nothing really matters. We're just going to smoke right through it. But yeah, the top of the channel is at 25. So if you're skittish and you think, you're of the belief that Bitcoin is going down to 12K, like, what's his name? I don't remember, like a lot of traders, like YouTube traders and, Twitter kind of traders, people who are, big in the trading community online say 12K, Bitcoin's going to 12K, Well, then if you're of the belief that it's going to 12K, you're likely thinking it's either going to reject in the middle of the channel or at the top of the channel, okay? So those are the levels you kind of want to look at, not necessarily 20K, because 20K, as you can see, by this channel has not been an important level here. Yes, we've hung out at 20K, but just for this, people have recency bias. Look at the chart. 20K is not that important. What's important is 25K. What's important is 18K. Okay, so we just bounced off 18K. Very likely that this is a move up. If you're a channel trader, this is kind of an easy trade, just long the bottom of the channel. Okay, so that's what I'm seeing with Bitcoin, and that's what, as a proxy for the cryptocurrency market at large. That's what I'm seeing for most of the rest of the market. You could do that, whatever asset you're trading, just channel it, right? It's in TradingView, the channeling tool. Very simple to use. Just draw a straight line, expand the channel, and here we're doing Cardano, and this is more or less the bottom of the channel, and this is there's nothing that is without risk, but this is a relatively low risk move, okay, because you're longing support, right? It would be really risky if this channel were to break. Then obviously you're probably going much lower. But again, look, the context is the larger Elliott wave count, which I'm not going to go over, but the larger Elliott wave count, the Fibonacci levels that we're on the weekly time frame, on the monthly time frame, and then looking at the DXY, it's unlikely that this breaks, because if this breaks, you're going at least the height of this channel to the downside, okay? Which is very unlikely given the context that I've stated, right? If you're just only looking at this, then you don't know, right? This is why you do analysis on the higher time frames. Let me just do it really quickly for Cardano. I don't want to digress, but just to give you guys an example, you go on your weekly time frame, turn your log on so you can faithfully represent this price action, and you can see where our channel is in the scheme of everything. Okay, and you can see in Cardano that you had previously put in 5 waves up. Do you see right here? 1, 2, 3, 4, 5. Okay, and then you put in 3 waves down. 1, 2, 3. Okay, so your context. Where do you get your context? Why do you have quite a lot of confidence in saying that this channel that we've been in for 127 days, 133 days, okay, it's probably closer to 127 days. We're on the weekly time frame, but anyway, 130 days, doesn't matter. This channel that we've been in for so long is going to likely result in a move up. Okay, a few things that you can do. All right, given that you've counted 5 waves from the bottom of this move right here, you can take your Fibonacci retracement tool from the bottom to the top of that 5 wave count, and you can see that you just barely hit the 382. You're not hitting the 382, okay? That is a telltale sign. That tells you that it's likely that you are in a wave 4 correction, okay? That you're in a wave 4 correction. That this is likely some sort of advance that's gone on, and you hit an extended wave 3. Okay, so your count would actually be different. Let's see. Let me just do this real quick. I'm just doing this on the fly. Okay, here we go. I would say that your count is more like this. So instead of counting 5 waves in here, I'd count 1, 2, extended 3rd wave, 4th wave, and then you're going for your 5th wave, okay? And the 5th wave is gonna go somewhere up here, okay? And why do I do that? Because again, your clue is that you haven't reached the 382, and typically wave 4 retracements go between the 236 and the 382. Wave 1 retracements have to hit the minimum of the 382. So this is why I know this isn't in a large wave 1, wave 2 situation. Do you see what I mean? Okay. And then to corroborate that really quickly, and this is again, you can look at Cardano, you can look at anything else, but you would do a larger time frame context to understand why it is that it's unlikely for this to break down more likely for this to break up. Does that make sense, guys? Like, this is the whole reason why you would do such a large time frame analysis, to get context, and that's the beauty that Elliott wave theory really provides. It's context like very, very little else can provide. Oh, what am I doing? I'm doing the measurement. So let's measure this first wave and retracement of the second wave. And ooh, guys, can't make that up. Look at that. Boom. You see, this is corroboration. This is what you call confluence, okay? So my thesis was, given what I saw, given the retracement that barely hit the 382, that this was a wave 4 retracement, okay? And I took that and I said, okay, let's try to use the Fibonacci extension tool of wave 1, retracement of wave 2. And where do you think wave 3 hit almost to the dollar? The 1618. That's exactly where most wave 3s hit, between the 1618 and the 2 Fibonacci extension. Guys, I may have done this before in the past, but you could see my chart was clean. I didn't cookie cut this. I'm doing this on the fly, okay? I even forgot that this was not a wave 1, wave 2 situation. I probably wouldn't have picked this example because it's a little more convoluted, and I just wanted to show you guys some quick, kind of large time frame, large context example. So yeah, that's why I would think that this is it, where we are right now. So now we could delete this, delete that. I think we have enough evidence, right? Given our large time frame analysis, also given our monthly double bottom on the momentum time frame. Okay, now let's go back on the 4-hourly time frame. Okay, we have enough evidence. At least I have enough evidence. Again, you never are 100% sure, but you're always dealing in probabilities. The probability is high enough for me to say that at the bottom of this channel, I can go pretty crazy. I'm very confident that, okay, yeah, we're going up. Can we wick below this channel? Yeah, we did. We can. No problem. Okay, but that doesn't necessarily mean that my next big move isn't up, okay? And it's now, let's zoom in real quick on even smaller time frame. Guys, if you're getting value, please like, share, and subscribe. Let's see. Zooming in. Don't need the log. I don't even need the auto. I don't need the momentum right here. Zooming in, I would say, let's see. Zooming in. I'm trying to see what this may be. I need to go on the 4-hourly time frame. Okay, so zooming in real quick, I would say really quickly on Cardano, got big A, that's clear, big B, boom, boom. That's your first degree, okay? And then now, this is your second degree here. That's your A. And then this. Ooh, that's tough. Boom, boom, boom. That's what I'm seeing. Small b. And then this is all a pivot. So again, context. What I always go back and count stuff before. I'm not interested in what happened before as much as I am this region, right? Because I want to trade this region. I want to see, oh, where should I buy in this region? But in order for me to understand what the hell this region is, I have to go back. Do you guys understand how you do that? The higher time frames and the previous price action allows you to set context. A/B basing patterns, context. So for me, in context of everything, this is a pivot. Okay? What is meant by pivot? It simply means that this is another A wave. You can call it alpha if you want, because I used A, big B, small a, small b. You can call this alpha and beta if you will. And this is 3 waves down, 3 waves up, 1, 2, 3, 4, 5 waves down. this should be it. This should be it. Okay? So let me simplify that. It goes like this. A or alpha, beta. That's what I'm seeing. So this is what I'm kind of seeing across the board. Like, you know, I went into detail right there with Cardano, okay, and broke it down. And this is kind of what I do with, you know, when I'm doing my own analysis, I'm entering my own positions. But, you know, if you were just, if you didn't have all of that information and you just wanted to simply do a brief analysis, you just draw your channel, okay? Oops, that's not a well-drawn channel. Try and draw a straight line, okay? Use your guides, whatever, here. Draw a nice channel. And buy the bottom, sell the tops. You know, don't do anything in the middle. Simple. Okay? And we were kind of already close to the bottom, but now we hit the bottom again. Okay? We were close to the bottom, right? We were here last time we spoke, right? And that's not a bad buy. This is close to the bottom of a channel. Now you're even lower, which is fine. You haven't broken the channel though. Your larger market structure hasn't been broken. This is the most important thing. Okay, so you guys get the hang of it. You get the gist of what I'm trying to say. This is my sort of watch list. This is everything that I'm loading up on in some way, shape, or form, either with leverage or just on spot. Okay. And so yeah, that is basically what I'm doing, and that's why I'm doing it, right? It's all about the DXY. I'm following the money, and the money looks to be going down in value. Okay, the dollar, which is what I mean by the money, looks to be going down in value. I don't know what happened to my screen right there. My DXY. Let's have a look. Quick look on the hourly time frame once again. Zooming in. Okay, we are expecting again on the small time frames for that 2 wave to come up around here, say. Yeah, so we're expecting a move up, which should result in another move down, a small move down in crypto. Okay, and if that's a small move down, perhaps it goes and does this right here. Let's see. Takes crypto or Bitcoin down in this region, okay? Because that would make this a 5 wave, 3, you know, 5 waves, 1, 2, 3, 4, 5. Sorry. Something like that, yeah? Perhaps. But I don't see this as a 3-wave move coming up and coming down all the way, right? I don't see this as corrective. I see this actually as an impulsive move, okay? Let's see. It's a small impulsive move. And here it's not even finished in Cardano. I think it's a wave 4. I think you're going into wave 5. It doesn't look very impulsive in Dodo, to be honest with you. Wouldn't be surprised if this was corrective right there. Ethereum looks a little more impulsive. Yeah. Litecoin, a little corrective, not gonna lie. XRP looks a little more impulsive, yeah? You see that? That does not look corrective at all. But yeah, this is a great time to accumulate, right? Let's do XRP as one last example for the altcoins in our watch list. Let's zoom out completely on the daily time frame. Let's get our channel tool. Right, look at that. Look at that daily candle. It's very nice. Okay, once again, try and draw a straight line. Top of the range here-ish. Bottom of the range here-ish. something like that. Yeah. Looks like we came to the bottom, and on the large time frames formed a nice rounded bottom. Okay, so yeah, you just had some resistance in the middle, right? Again, the middle of the channel, that's resistance if you're below it, support if you're above it. Okay, so all of these concepts are, universally applicable, and you can see them play out, right? Top of the range, resistance. Bottom of the range, support. Middle of the range, resistance if you're below it, support if you're above it. Boom, boom, support. Boom, boom, resistance. 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 Do you see that? Right? Channel trading. Some people make livings off just trading channels. And this, I think, is a good strategy in a chop market or in a consolidating market if you're at the tops or a bottom of a market. Rather, yeah, I guess. No. Let me take that back. I think it's a good strategy to trade chop on small time frames in the middle of a market, not at the bottom. At the bottom of a market, it's smarter to just buy everything. Even if you're buying the tops of channels, depending on how you're buying, obviously. If you're buying spot, it doesn't matter. It doesn't matter. Obviously, you want to buy the bottoms, but anywhere here, it's the bottom of a market. You won't care in a few months, okay? But at the top of a market, right, and I'm talking about macro top, right, you want to accumulate sell positions at the top. Just like we're in the DXY, you see the channel at the DXY that we marked off. This is where you want to sell. Like if you're selling the dollar, which you are when you're buying crypto and you're investing in stocks, you want to sell the tops here. Every time it gets close to the top, you want to sell the top of the channel, right? So that's essentially what you would be doing in the at the top of a market, right? You would sell the tops in small or low leveraged short positions. And I think the best strategy, and this is just personal, what I would do. The only way I'm trading this long and short and long and short and long, right? Like on small time frames, is if we're at the middle of a market and this is like a complex wave 4 correction. And not yet at the top of the market, not yet at the bottom of the market, right? Kind of in the middle of a bull run. And we're kind of not doing anything. Maybe I'm de-risking and taking small bits of capital and kind of trading this up and down for fun, okay? It's not the best way to make money, but it's a way, okay? It's a strategy. The best way to make money, hands down, bottom of a market, just like we are now, and just buy the hell out of these consolidation reversal patterns. It doesn't actually matter where you buy in this range, but ideally, like I said, you want to buy the bottoms. Guys, if you're getting value, please like, share, and subscribe. That's pretty much it for me. Guys, if there's nothing else, we're going to call it a stream, right? This has been a very challenging bear market, very challenging consolidation period. But again, put it in context. It's a great, great opportunity, right? This is Polkadot. Look at this range, 130 some odd days. Do the same thing. Boom. Top, bottom. We're at the bottom. This is a great buying opportunity. There's not more to say, all right? Guys, love you. Thank you for joining. Thank you for watching. If you're watching live or if you're watching, recorded, take care. Hope you accumulate these positions. Make a ton of money in this coming bull run. It will come, and it will be glorious. Can't go down forever. Every peak has a trough. Every wave, every yin has a yang, right? So take care and accumulate, accumulate, accumulate. And then we're gonna ride the waves up, 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 and up. And believe me, it's gonna go way higher than most people think. Most people are completely underselling the bull market, completely underselling it. Thank you, Nice Hash. Have a good one yourself. Take care.